Hello and welcome to Stocks Down Under. My name is Stuart Roberts and I'm one of the co-founders of our service. And joining me this morning from Sydney on the morning of the 16th of December 2024 is Mr. David Wrench, who's the CEO of QPM Energy, ASX QPM. David, good morning.
Yeah, good morning, Stuart. How are you?
Very well. David, now is a good time to be you. The gas project in northern Queensland, or sorry, rather central Queensland, I think it's fair to say, is sitting pretty right now. You're supplying a gas-fired power station at Townsville. You've just bought another one, the local Moranbah power station. The east coast of New South Wales is looking a bit unstable in terms of where the energy grid is, and public policy makers are talking about needing more gas-fired power stations. This is perfect for you, right?
Well, yeah, I think it is, and I guess it's been a pretty important part of our strategy as we've been, developing our energy business. We are unique in that we are an integrated energy business. We produce the molecules of gas from the ground, and we take it all the way through to generation of electrons and sale into the national electricity market. So we have a pretty unique opportunity here to be a meaningful participant in this market. And as we're seeing, there is, increasing volatility in electricity prices, and particularly around the transition at the end of the day in Queensland in particular, from where solar is the dominant generation source through to, other means of dispatchable generation. At the same time as you're getting very, very significant increases in energy demand, predominantly AC loads, people come home and switch their ACs on. So what we're seeing is this incredibly fragile market. And of course, the way that we're operating our assets is to be generating electricity into the market at exactly that time. And we just try and do that every day. And every now and then we are able to benefit from some extremely high pricing, and that's been a very, very valuable revenue stream for us as a business.
Right. This was a project that was generated by you back in the early 2000s. Ended up in a firm called Queensland Pacific Metals, which is where the QPM comes from. And the company invited you back last year to run that project, named you as the CEO of Queensland Pacific, which became QPM Energy earlier this year. How's it feel to be back in the game?
Well, yeah, it's been a long journey. So I was involved with the Moranbah Gas Project going way back to 1999, actually, when we founded a company called CH4 that was the original developer of the project. And so it's been a great privilege to be able to come back, and 20 years later, and I've actually brought back a lot of the original team that worked with us back in the early 2000s, in particular, as we developed the project. And it's been great to get the band back together again to a certain extent. And what we've been able to do is in terms of an operating turnaround, we've been able to effect a very, very significant turnaround in the way the field and the assets have been operated. And a lot of that has just been implementing some of the processes and procedures and so on that we had developed a long time ago that had somewhat been forgotten, I think, in the interim period. But we've put all of those practices and operating procedures back in, and we've seen the wells and the field respond extremely well. We've increased production. We've also been doing a lot of work around understanding the reserve base, because the gas field has produced about 240 petajoules since it was originally developed in 2003-4, but there's still 330 petajoules left. So this field, is really over 500 petajoules already, and we are now seeing, as we go into the next phase, that a lot of the wells that are still producing, or that we produce from, have actually, over their lives, produced more gas than was originally estimated that was estimated that they would produce. So we're seeing recoveries now from this field at over 100%. So we think clearly there is more gas in the field than was originally estimated. And what we're now doing is completing some work to understand how much that might be and how that affects the overall resource and reserve position going forward. So we think there is scope for this gas field, the Moranbah gas field, to grow even further and become a very, very major tier one gas producing asset. So, it's been great to be involved with this sort of reinvigoration of the project, and it was back then, and it is still a fabulous asset, actually.
Now, I got to disclose, I'm a shareholder and I'm pretty excited because right now I can buy you at a fraction of what you potentially are worth, just in terms of dollars per resource at the moment. And typically, it's a dollar per gigajoule is the kind of rule of thumb benchmark that gas assets trade at. The moment I can get you under 40 cents a gigajoule, so you're inexpensive just on the basis of Moranbah.
Well, yeah, that's right. I mean, I think the story. I think, as you alluded a little earlier on, the story has been a little confusing for the company. I mean, the company QPM was originally founded to develop a nickel refinery, and Moranbah Gas Project and that energy component was really meant to be the energy supply chain for that
Right.
refinery.
Right.
Of course, we've had to pivot pretty quickly, and that's in response to what's happened in the nickel markets in particular. And so because of that, I think it's taken a little while for the market to understand and probably pick up on the fact that the company has now pivoted quite dramatically in its business. I think we're starting to see that coming through now, and I think it's also been helpful to have obviously a lot of commentary around about energy in Australia and gas and electricity and what's going on, and that's helping us because I think people are now starting to understand that at its core, our business is connected and linked into that market. So I think we've got a couple of things that have shifted in terms of the view of the company. Albeit, I agree with you, we've got a long way to go. I think there's quite a deal of value in this company that's still unrecognised. But I think I can kind of understand why it's taking a little bit of time for the market generally to pick up on us. Also, we are a little bit unique. I mean, there's not many companies. In fact, I can't think of another company that has the suite of exposure that we do, particularly a direct exposure to electricity markets
Right.
and the
Absolutely.
Queensland market in particular. Most other companies that generators or have peaking generation are typically vertically integrated. So they'll be like an Origin or an AGL, where they'll have a retail electricity book, so they're hedged, and you don't really get an exposure. There's very few companies that actually have that direct exposure, and we do.
Right.
So again, that takes a bit of time for the market to understand how that works and understand how our revenue model works. But I think it's starting to get picked up now, and I think we're starting to see a bit of a positive trend in the stock price, and I hope it continues.
Right. Now, so I looked at the numbers here. Basically, you produced about 30 terajoules a day. The gas gathering capability in the project is about double that. So now that your engineers have got a bit of a fix about how they've underestimated the productivity of those wells, the ease with which the infrastructure that is already in place for you to easily increase production from there.
Yeah, that's right. The field was originally designed to run, and it did run when it was originally developed at around 50 to 60 terajoules a day. So all of that infrastructure is still in place, and clearly we're not using anywhere near the full capacity. So there's a heap of latent capacity in the system, and I guess the challenge for us now that we've kind of step one for us was an operational turnaround, get the field production stable, get our team embedded, turn production around. And we're now starting to, go to this next stage, which is how do we grow the business, both in terms of production and also how do we grow the revenue streams within the business? Because gas, you produce it, you've got to use it. You can't stockpile it.
Right.
So we've got to actually develop those, both production and ways of monetizing that extra production in parallel. So you might have observed or noted that we've just completed a 7-well drilling program, and those wells are now online and just starting to produce gas. So I think over the next 3 to 4 months, we'll start to see incremental production coming through from those wells. The initial early signs have been very positive, but they will take a bit of time to build production. So that's a big step for us. It was the first time as a company we had drilled wells in this field, and so that was a big achievement for us. And we're now bringing them online, and we're going to hopefully understand, again, productivity from those wells. We're now planning the next phase, the next part of the drilling program, and clearly what we're doing is trying to understand all of the learning we got out of both the drilling and the way the wells are producing and so on, and we're incorporating all of that into our next phase, which we hope to be in the field mid next year. And that'll add another, sort of step up in production. I guess we're continuing to work with our existing group of wells, keep high well availability, and also progressively bring back online. There's a vast cohort of wells that are not producing, still there, but not producing, and we're working our way methodically around trying to bring more and more of those back into production. And then typically we're finding they're coming back into production once they're fixed, whatever the problem was, and continuing to produce at, relatively stable levels. And so that's another way of adding production. So all those activities are going to be continuing in 2025. And I guess we've got more capacity to run the Townsville Power Station. We've now added the Moranbah Power Station. So we're starting to build our pathways to monetization of that extra production. And, I guess the next step for us will be, where do we go as we get production into the 35 terajoules a day to 40 terajoules a day? We'll need to start moving towards other opportunities for revenue generation.
So talk to us about the Moranbah transaction. How did that come about? The recent power station acquisition, I mean.
Oh, the power station, yeah. Okay.
Yes.
So the Moranbah Power Station has been, actually was developed, again going way back, and it was developed to supply power back to the field, to the Moranbah gas field,
Right.
And it was only very small. It was only about 5 or 6 megawatts at the time. Over the period, the power station was expanded. It's now 12.8, 13 megawatts. But the commercial arrangements for the use of the power station, weren't very favourable for the Moranbah Gas Project. So it was better for us to be buying power and sending gas to Townsville. We get a better net back for our production than using the power station. So in recent times, the power station hasn't been used.
Right.
So the issue for us was that we had, some very high fixed costs associated with that power station. We weren't using it. The owner of the power station, a company called Sustainable Energy Infrastructure, really wasn't intending to continue on, or didn't really want to continue on with the arrangements. And so we ended up negotiating a transaction where we acquired that power station, or working with a firm called Carbon Logica, acquired that power station, and we'll get the right now to operate it on much better commercial terms. So we'll get lower cost electricity for the field, plus we'll be able to use the excess capacity that the generator has to export into the grid, at the same time as we're using the Townsville Power Station. So for us, it's a cost reduction exercise, plus it provides another revenue avenue for us.
Right. Now, obviously, this is not the core of the business at the moment, the old refinery in Townsville. But call me crazy, I'm still bullish long term on nickel. I see it's bouncing around there around $15,000 or $16,000 a ton on LME. And one of these days, there'll be more demand for nickel than there is supply. In which case, you're sitting pretty with that asset. You've got some government grants to build out the potential of that project. Plenty of lateritic nickel to bring in from New Caledonia to feed in on the day when it becomes economic. So that's almost a free option on some considerable upside.
Yeah, Stuart, that's right. I think that's a good observation.
Well,
I guess,
right that I'm crazy, right?
Yeah. Well, both observations are probably right, but the observation around the nickel market, in my view, look, it's a commodity market, and commodity markets go through cycles where you get, oversupply, overproduction. And of course, that leads to low prices, which leads to no new production, which then leads, of course, to undersupply ultimately, and a correction in prices. So that's the cycle. And I think in the nickel market, we're right at the oversupply part of the cycle. But so it makes investment in a new nickel refinery pretty difficult in the current environment, and that's the reality. However, I agree with you. It's a great project. It has incredibly good environmental credentials. And I think over time, as nickel markets recover, I think there will be an increasing distinction or premium for nickel that is produced with very, very strong environmental credentials. And of course, this is the really core of the direct nickel process. That is the core of the Teck refinery. So I don't know when that's going to be. I suspect there's some years before those dynamics shift. But what we've done, as you've mentioned, is we're continuing to work on the project in terms of optimization of some of the flow sheet and some of the processes, looking to reduce capital costs and make sure that the project's in as good a position as it can be, so that at the right time it's going to be a very attractive development option. So the work that's being done and the team that we've got working on that project has been funded or is being funded by both federal and state government grants. So from a QPM Energy perspective, we're not devoting financial resources to that project, but for the shareholders, it allows us to keep the project alive and moving forward, really just to optimize the value in that project at the right time. So we're trying to ensure that we capture as much value as we can in that project without investing, dollars that we don't have available for it at the current time. And, who knows, a couple of years' time, it'll be a great asset. And, our hope is that we're in position there to make sure that the shareholders benefit accordingly.
Right. David, for investors who don't know you, which I suspect is a lot of people, you studied mining engineering originally back at UNSW, but you spent a lot of time in the private equity business of Macquarie Bank before you came back to the oil patch. Tell us a little bit about your career up to date.
Yeah, I've had done a number of things in over the time. But yeah, no, originally I'm a mining engineer going way back. I've spent time in commodity markets and both precious metals, and I spent a number of years in the US in the oil and gas markets in particular. So I've kind of got a reasonable understanding of both the drivers of the technical and operational side of a resource business, but also the financial and market side. When I came back to Australia, I worked for Macquarie in their private equity group, and CH4, the company that was the developer of the Moranbah project, was one of the investments that was funded through Macquarie in that process. So, I've sort of been involved in early stage resource businesses and running companies for some time. I came back into this business really to help the QPM Teck project secure its energy supply, but of course didn't really anticipate ending up running another company. But sometimes you just can't pick where things go, but that's what's happened. And obviously the circumstances have transpired so that I'm now back running a project that I started 20 years ago. So there we go. It's a circle.
Right. David Wrench, thanks for joining us at Stocks Down Under, and good luck on the next stage of Moranbah.
Great. Well, thanks, Stuart. Appreciate the time.